Welcome to an episode where you ask the questions and I give you some answers. Not necessarily correct, but it's good fun anyway. And sometimes we get a puppy in the background, so that's always good fun. First question, the market is looking pretty bleak. Bitcoin is down about half of its all-time high. So where do I think we're heading? Markets always look the worst near the bottom. It's always been that way. I've seen enough crashes to know that fear creates a lot of opportunity. In 2018, people said Bitcoin was dead. In 2020, they said the world was ending. 2022, FTX crashed. They said that crypto was finished. Every time, the people who stayed calm came out on top. Prices could fall further, absolutely. Nobody knows what the market will do next week, next month, next year. What I know is that Bitcoin is stronger today than ever before. More companies own it, more professional Wall Street funds own it, more governments are looking at it, the strategic reserves. The network keeps growing, the technology keeps working. When everybody is excited, I get cautious, get worried. When everyone is scared, we start shopping. I don't think that right now is the time to panic. I think that this is the time to stay patient, keep cash on the sidelines, and look for quality assets that are selling at a discount. Question, why is Ethereum stagnating? Well, Ethereum really has a marketing problem. Bitcoin is easy to explain, it's digital gold. Solana is easy to explain, it's super fast, super cheap. Ethereum is the largest smart contract network in the world, but many investors struggle to explain why they should actually own it, why they should buy it. The good news is that Ethereum still has the largest ecosystem of developers, DeFi projects, and tokenized assets in the world. The bad news is that the market doesn't reward you for being the biggest, it rewards you for growing. Right now, investors are chasing whatever looks new and exciting, going after AI tokens, meme coins, new layer ones, things like that. And Ethereum feels a bit boring, a bit like Microsoft in the early internet days. It still has a lot of value, but it's no longer the shiny new toy. I don't think Ethereum is broken. I think it's just going through an awkward phase while the market decides what role Ethereum actually plays in the next stage of crypto. Question, what's needed for Bitcoin to go back to its old all-time high? So we want it to basically double from here. And the simple answer is we need more buyers than sellers. Every 4 years, Bitcoin cuts the number of new coins entering the market. That's built into the code. When the demand stays the same and the supply gets smaller, prices usually rise. That's just it. The next all-time high won't probably come from retail investors like it did prior to 2018, 2020. It will likely come from companies, funds, pension managers, governments buying Bitcoin as a strategic long-term reserve asset. The good news, we're already seeing that happen. The bad news is that markets never move up in a straight line. It goes from 60,000 to 120, back down to 60. Bitcoin doesn't need everyone to buy it, it just needs a steady stream of new buyers while the existing holders don't sell. If past history repeats, there'll be plenty of scary headlines before the next all-time high. There always are. I don't think we're going to go much lower at the moment because of the cost of production. Next question, is quantum computing a genuine threat to cryptocurrency? Possibly one day, but not today. The headlines make it sound like a quantum computer will wake up tomorrow and steal everyone's Bitcoin. That's not how it works. If quantum computers become powerful enough to crack modern encryption, then banks, governments, military systems, your email providers, business, most of the internet will have the same problem. Crypto will not be alone. It's going to be everything. The good news, developers are already working on quantum-resistant security. Bitcoin can be upgraded if a real threat appears, just as software has been upgraded many times before for viruses and patches and exploits and hacks and things like that. At the moment, quantum computing is like a cyclone. It's 5,000 kilometers out to sea. Don't panic. You watch it, prepare for it, and you only act when it's actually necessary. There are people at the moment building quantum-resistant tokens. It's like trying to build a bulletproof vest when we don't even have the bullets yet. We're not really sure what we need. Don't panic. Just stay informed and realise that if a quantum computer suddenly comes online in 2040, it'll be so expensive and so powerful that major governments will be controlling it, not just rogue thieves and scammers on the internet. By the time quantum computing is 2 years away, someone will be working on real protection. Crypto code can be changed in a day, and quantum computing is worth watching, but it's not something that keeps me awake at night. Hitchhiker's Guide to the Galaxy. Don't panic. Question, do I see hype as a real investment? Yes, it's a growth investment, not necessarily a safe investment. When we look at a crypto project, we use the proprietary coin protocol, C-suite, who's running it, offer, what does it solve, investors, who's using it, network, is anybody talking about this project? The hype project scores well on all of those tests. The platform has real users, real people behind it, real trading volume, absolute solid revenue. It's a lot more that can be said for many crypto projects and AI projects and other projects with no revenue. Doesn't mean that hype is guaranteed to succeed. Early stage investments can make you a fortune, or they can teach you an expensive lesson. I like hype because it appears to have a genuine business behind it, but we never bet the farm on any single token. We don't bet 100% on Bitcoin. That's why our portfolio often exceeds the performance of Bitcoin itself, as well as exceeding the many Bitcoin-only mono funds. Yes, we're looking at you, BlackRock, Fidelity, Grayscale, WisdomTree, ARK Invest, VanEck. Diversification in your crypto portfolio is absolutely king. The smartest investors survive by being right often enough, not by being 100% all in on just one idea. Diversify. Question, as a fund manager, what are you doing to prepare for what's to come? Okay, we don't know what the future is. Anybody who says they know exactly what the future is either guessing or they're selling something. Right now, we're focused on 3 key areas. We want to hold our quality assets. We want to keep cash available for when bargains come up. And number 3 is looking for the opportunities that other people are ignoring. When markets are booming, everybody looks smart, everybody feels great. But when the markets are falling, that's when the real investing game begins. We're not trying to predict every move. We're trying to build a portfolio that can survive the good times and the bad. Nobody's going to be able to win every single month. The goal is to be around for the next decade like we've managed to survive the last decade in crypto. That means we take sensible risks, we avoid the emotional decisions, and we remember that every crypto market eventually feels obvious in hindsight, whether it's good or bad, but we plan either way. Question, if Michael Saylor sells Bitcoin, should you also sell your Bitcoin? No. Michael Saylor is not your mum. Michael Saylor is not your financial advisor. If your mother is taking pills, that doesn't mean you should take them. Michael Saylor's goals, risks, and timeframes are different from yours. If strategy sells Bitcoin, doesn't automatically mean that Bitcoin is bad. Companies buy and sell assets for many reasons: debt management, cash flow, accounting, regulation. The real question is, have your goals changed? Has anything happened that makes this a bad investment for you? If your reason hasn't changed, if you bought Bitcoin because you believe in scarce digital assets, you believe in decentralization and long-term adoption, somebody else's sale shouldn't change your plan. One whale selling doesn't change the fact there's only ever going to be 21 million Bitcoin. A lot of the crypto projects do have great solid teams solving real world problems. Too many investors spend their lives reacting to what other people are doing, and you need to stick to your plan. Make a plan and stick to your plan, no matter what anybody else is doing. Next question, how will the Clarity Act impact the crypto landscape? The biggest problem in crypto has never been the technology, it's the uncertainty. Businesses don't like uncertainty, investors don't like uncertainty, regulators don't like it either. The Clarity Act aims to provide clearer rules about which assets are securities, which are commodities, and exactly who is going to regulate what. That's good for the industry. We're finally going to know who to talk to about different things. Large investors don't worry about the regulation. They're more concerned about confusion versus clarity. Clear rules make it easier for the banks, funds, and public companies to enter into the crypto market with confidence. The law is not going to solve every problem. It's not going to remove every scam. Looking at you, Nicola, Newton, Lizzie Holmes, Enron, OneTel. How will the Clarity Act impact the crypto landscape? The biggest problem in crypto has never been the technology. It's the uncertainty. Businesses don't like uncertainty. Investors don't like uncertainty. Regulators don't like it. The Clarity Act aims to provide clearer rules around which assets are securities, which ones are commodities, and who gets to regulate what. That is good for the industry because we know who to talk to about different tokens. The big investors don't worry about regulation. They're more concerned with confusion versus clarity. Clear rules make it easier for banks, funds, and public companies to enter the market with confidence. The law's not going to solve every single problem. There will still be scams around, absolutely. Looking at you, Nicola, Newton, Lizzie Holmes, Enron, WorldCom, OneTel, there's scams around in property and in stock markets, always have been. They're always around in every industry. If crypto wants to become a $1 trillion mainstream industry, it simply needs clear rules of the road. Good regulation should be tight enough to protect the investors without being too tight and killing the innovation. That's the balance that the lawmakers need to get right. Good luck. Next question. What's my view on Australia's proposed CGT changes, and will money move from property into shares and crypto? Great question. CGT changes will change investor behaviour, but it won't change it overnight. For decades, probably a century, many Australians have been taught that property is the safest path to wealth. Many Australians have been taught that property is the safest path to wealth. Okay. For decades, many Australians have been taught that property is the safest path to wealth. Part of that was the belief that negative gearing and favourable capital gains tax treatment would help offset the costs of ownership. This may no longer be the case, which may cause some changes. The benefits get reduced, investors start asking different questions and saying, if I'm taking the risk anyway, where will I get the best return after tax? That's where shares become very interesting. Australian shares offer fully franked dividends, which can be far more tax effective than rental income. The stocks don't call you at midnight about the broken hot water system or the oven light is out, and you can buy or sell stocks in a few minutes rather than a few months. Crypto may also attract some of that capital, particularly from younger investors who already see Bitcoin and crypto as a form of digital property. Bitcoin doesn't have tenants, crypto doesn't have maintenance bills or land tax, and it can be bought easily in small amounts by almost anyone. A couple of bucks on your broking app. Investors won't abandon property, particularly Australians who love real estate. That's not going to change overnight. It may not change in the next 10 years. It may take a generation. But I do believe that money that would have gone into a second or third investment property may now start to find its way into shares, ETFs, and cryptocurrency. If the changes go ahead, the biggest winner may not be property or crypto, may simply be investor choice. As far as reducing tax, focus on legal strategies, hold quality assets for the long term, make good use of business structures or your superannuation, keep excellent records, and get advice from a qualified accountant. The goal is not to pay zero tax. The goal is to build wealth efficiently and keep more of what you earn. If you do the math, you'll find that a stock paying 3% franked dividend will give you more after-tax income than a property or a bond that's paying 4%. And it's even better if it's in your superannuation. The next question, what's next for BostonTrading? Why should I consider investing in your fund? Our mission hasn't changed in the last 10 years and previous to that for 30 years in stocks. Help ordinary investors build extraordinary wealth. We're not interested in chasing every shiny object or making wild predictions on social media. We're focused on finding quality opportunities, managing risk, helping investors stay in the game long enough to benefit from compound growth. Get rich slowly, build it forever. What's coming up next for us? More education, more research, more transparency, continued exposure to the sectors we believe that will shape the future, which is digital assets, technology, and emerging opportunities. Why would anybody consider our fund? Predominantly because we're investors. We invest alongside of our clients. We've been in the markets for a long, long time. We believe in clear communication, sensible risk management, and long-term thinking. Anybody can look smart during a bull market, but the real test is how you navigate the difficult periods. We've been through numerous crashes in crypto. We've got a lot of experience in stock markets. And that's where the rubber hits the road. If you want more information, visit BostonTrading.co, see the frequently asked questions, check out our current holdings under the portfolio, refer to the 10-year charts under monthly updates, and if you get stuck, you can ask Boston Bob or book a chat with one of our team. Talk to you soon.